Hey everybody, welcome. It's Mark Coe from commoditiesguy.com. Here today to talk to you about time frames for day trading. Everybody asks this question and I get this all the time. What is the best time frame to be on for a day trader? I'm going to take a little different angle here for you. What I focus on in my strategy and in my teachings is not time frame, it's levels. So let me walk you through a little bit of this. I have up here a gold chart, gold futures. All right, just Monday. Today is Wednesday, the 15th of March, 2017. We're about an hour and a half in front of the FOMC decision. Let's just take a look at gold here. What I have up is a 15-minute chart. And so what people are really asking the question is, if I want a day trade, should I be on a 15-minute chart? Should I be on a 5-minute chart? Should I be on a 1-minute? What's the best day trading? But I'm going to give you a little different angle and show you why it's not about your time frame. It's not your time frame. It's your levels. It's your levels that really matter. So let's just take a look at Monday. All right, so thinking about Monday's action. So we have the Sunday night open. Gold opens 12:05. Trades up to 12:10. Question I would pose is, if regardless of whether I'm sitting on a 5-minute chart, a 1-minute chart, 15-minute, 30-minute, is this level right here, this 1210, 1210 and a half, is this area on every chart? And the answer is yes, it is on every chart. So then what people start to focus on is they say, well, does this spot look different if I'm on a 5-minute or a 1-minute? In other words, will I get some kind of a read of power? Will I get some kind of a sell signal if I'm looking at it on a different time frame? And my answer is, you're worried about the levels, not the time frame. So let me just show you this. This is a 15-minute chart, and this is the 13th of March. Just when Europe starts to walk in, the highs are put in. Europe walks in at 3 a.m., and that was the high of the day. All gold does for the rest of the day is sell off. Let's take a look at it on a 5-minute chart. Just see, does it look any different? Does anything different happen on a 5-minute chart? And the answer, as you all are going to be able to determine, is no. It's the same move, right? It's the same move. The only difference is on the 15-minute chart, where it took 2 to 3 candles, this one takes 4 or 5 candles. But it's the same chart. It's the same, I'm sorry, it's not the same chart. It's the same level. So here's what I want to focus on. Not what time frame. What I want to focus on is, what does the level show us? So to get that answer, what I want to do is I'm going to back up a little, regardless of whether your goal is to be a scalper, a day trader, a swing trader, or a long-term trader. The goals are not different from how we're going to go about this analysis. But here's my point. Even if you're the quickest of traders, the couple ticks, which I find that to be pretty dangerous stuff, but essentially, you're still wanting to focus on the levels. So for purposes of this discussion, let's just go ahead and look at a simple 1-hour chart. And let's focus on this level, this 1210 and a half level, and see what can we derive from 1210 and a half. So here's your 1210 and a half on March 13th at 3 o'clock, 2 or 3 o'clock in the morning. But that's not where the level is put in. Here's where you want to see what it's doing. You want to look left. And in looking left, what do I notice? Well, gold has been in a downtrend, and so all I'm trying to do is spot levels that are of some interest for the market. In other words, what kind of information can I derive from this area? Well, if you notice, back from the 8th of March when gold broke below 1210, what was the highest level gold could ever get after breaking below 1210? And here's your high on March 8th. So when I pull that level over, right? So that the level was created on the 8th of March. It was not created on the 13th. This is where it was created. And so all I did was pull that level over, and then 4 days later had an opportunity to look at it. And so the answer becomes not what time frame is the best to look at, but what level should I be concerned about? And again, what do I know about this 1210 level? Well, I know 1210, and what is the absolute high? The high was 1211.40, And I pull my zones over from candle opener closes to the wick, and that's what creates this zone. So this box that I have is $1.90 wide. That's how big this is. So now from that derives the zone I would be looking to sell gold on any type of rally. So my newsletter, my long-term model, it's all been short gold. It's shorted gold on the 1st of March. Right? So if you haven't checked that out and you have an interest, take a look at it. It's a free 2-week trial. But getting back to gold, looking at it from the standpoint of what is the best level. Once I understand that my level is marked, and I now take this to a tighter time frame with that same mindset, now I'm able to mark the 1209.5. Right? So there's my zone. That's my sell zone. Now, answer this. 5-minute, 15-minute, 30-minute, 1 minute. Will this zone appear in all those time frames? And the answer is yes, it will. Will this same move appear? It's going to have different numbers of candles, obviously, because the time frame's different. But that's all that's going to be different. The level is the same. So what can you derive from this? Well, on the first visit into this level, what happens? I mean, it's a matching high, really, with those two candles. The move out of it tells you sellers are still controlling the zone. The tap back into the level gives you a really good spot to be able to sell, knowing that you could be stopped out above it. Because after all, that's the number one thing we have to determine is what is the risk in the trade, right? We're trying to determine what is our risk. When the market shows you a level that will rotate off $13, $14 in gold in a short period of time, don't you want to look at that level again? And I know I do. So again, 5 minutes, that's what it looks like. Let's look at 15 minutes. It's going to be the same. It's going to be the same. Here's your 15-minute. Whoops, I keep messing with these charts. 15 minutes. Here's your zone. Let's draw our zone. It was 1209.5 to 1211.40. That was your zone. Do you see the same thing? Big bullish move right into it. Shouldn't a very bullish move that all the day traders want to jump on and say, gold's going higher, gold's going back to 1220, whatever they think gold's going. That's a big momentum move. How is that able to get stopped right at that level? I mean, that's big bullish action, right? It's bullish action. But who came in and squashed it right at that point? Stronger players, bigger money, sell side, because you took it right to their level. And how do we know where that level was? It was marked there on the 8th of March. I mean, look, you got a test of this level right here, this exact level. You got a test of it early in the day. It finally broke below it. That's your zone. That's your lock it up, back up the truck, I'm in the zone. That's it. And what happens if it rotates and goes through it? You're done. You're done on a stop, but it's a very controllable stop. What happens if it rotates back down to the last bottom edge balance zone? You're getting paid about 15 bucks. Did this one rotate to the very bottom edge? No, it's putting in a new bottom edge about $13 lower. You know, so there was about $1.50, maybe $2 of risk in this gold. It's not bad for a day trade. That's a couple $100 on one contract. But your payout was about $1,300 per contract. So from a day trading standpoint, I don't care how fast you want to be. I don't care how fast you want to be. If you want to be scalp one minute charts, that's okay. But do it at good levels. And that's the biggest issue that traders have when coming into this really short-term time frame. One, they don't realize who they're competing against a lot in the very short term. You're competing against machines. But two, you're choosing to compete where you don't actually have an advantage. So if you start to play at those levels versus just chase momentum, all of a sudden the game's going to change for you. But you have to be willing to look at it from that standpoint and understand that it was the market you could change. It was the market that could rotate from level to level, and that's what you're trying to understand. So It's levels, levels, levels. And I will do a session on levels in further depth. But this question is just so common, I get it all the time, that I wanted to make a video on it talking about what is the best time frame to trade. And the answer is there is not one best time frame. There are best levels, and you can choose to look at it in any light you want, whether it be 5 minutes, 15 minutes. My suggestion is always do multiple time frame analysis. You're going to find if you go from the very short term to the long term, you may come up with different answers of who's controlling this market, right? If you look at this little section of chart and you're looking at it on a 1, 3, 5 minute, this little section of chart from Friday into Monday morning's European Open, you're going to look at it and say, wow, buyers are really controlling this market. You know, so if you take that little section on a 1 minute, 3 minutes, something very tight, let's see what it's going to look like. So this is a 3 minute look. There's your 3 minute look. So if you're day trading, if you're scalping, don't you think that you would look at this, you walk into work early, don't you think you're going to look at this and just say, wow, we're going from bottom left to top right. It's clearly in an uptrend. I'm going to buy the first pullback. Well, what happens if you buy the first pullback of this move? You know, you buy the first pullback. You say, well, I'm going to buy this level. It's a really good level. It's a really good level because after all, price was just 12.10. So I'll just come in at 12.0750 because look, this market's really bullish. There's your 12.0750. I mean, does it stall? Yeah, it stalls. But look, it collapses. Why? Because the bigger money, the longer term money, the money that's moving the markets came in and acted up here. It's not the 5-tick trader that's coming in and pushing this market around. There's actual sell interest that's willing to drive this market, and there's more of it here than is sitting at 1207.5. So I would suggest you look at multiple time frames, and if you want to be quick in your actions, you want to be fast and you want to be in and out of the market on a daily basis, then do it at good levels, right? Do it at good levels. Don't be your broker's best friend by trading 50 times a day. Over trading does not equal better profits. Oftentimes it is the exact opposite. It equals losses. Tight stops does not equal more profits. Tight stops at good levels is smart, but just tight stops in general does not mean anything. So understand that and look at how you're approaching this market. And I would suggest look at levels, levels, levels. All right, guys, so for commoditiesguy.com, I am Mark Coe. Best to you all, and I hope you enjoyed the video. Thanks.